You had touched on some of the larger biotechs and pharma going out of the basic research and then going into acquiring mode. And I was wondering, since those little companies that are being acquired are venture capital funded, are the venture capitalists taking in unreasonable risk in investing in biotech if biotech itself isn't willing to do this?
Well, it's really interesting to see what's going on in startups and new company formation. So around late 90s, it became clear that we were going to sequence the human genome. And investors believed that that would revolutionize drug discovery and development and commercialization. And in fact, it will, and may already have done that, but it hasn't made anyone a lot of money. But in 2000, we had our own bubble in the biotechnology industry around the genomic sciences, where literally anyone with an annual report with a picture of someone with a DNA sequence and a white coat could go out and raise $50, $100 million to revolutionize drug discovery based on sequencing the human genome. And that bubble burst and people lost a lot of money. And so after about mid-2000, or since mid-2000, it's been really, really difficult to get, to start innovative new companies. And the reason is venture capital investors usually don't start companies because they like starting companies or they want to start interesting companies. They start companies because they need a return on their investment and they need an exit strategy. And that exit strategy and that return has historically come through initial public offerings. But the public markets since mid-2000 have basically ignored the small cap, the startup biotechnology companies, and initial public offerings have been incredibly rare, and the few that have gone on have not been largely successful. So the venture capital investors, instead of starting entrepreneurial companies pursuing drug discovery and interesting science, they're doing two things. Number one, they're not starting new companies at all. They're saving their money to invest and to keep the existing companies in their portfolios going until at some point they can go public and they can get out of their investment. The companies they have started have been really what we call devcos, or development companies. So they're taking existing products that have been reformulated for new uses, products that have been abandoned by big pharmaceutical companies, either because they were being developed for indications where they failed and someone thought there would be another indication, or they were being developed for an indication that was viewed as being too small and therefore not attractive. And so about the only company that can get new company that can get venture funding now is a company that has a story that along the lines of a product in phase 3 clinical trials where we can get to the market quickly and either become profitable or to be acquired by or to be the subject of a successful public offering. So I actually worry a lot about this, and as a company whose business model depends on innovation, I really worry that since middle of 2000, there's been very little venture investment or new company formation around companies that are trying to do innovative science and really reach for new cures for serious diseases. We have a small venture fund at Genentech in our group that we manage, which we created just to invest in some of these smaller entrepreneurial companies to help them get started, with the thought that if they're successful, maybe they'll be willing to partner with us at some point in the future. So I worry about a potential innovation gap because of the limited number of new companies that have been started and the kinds of companies that have been started.